radio network and your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions@theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at BANTIX.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it's time once again for TWIFO. This Week in Futures Options, a program where pretty much the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. So we talk maybe a little bit of gold, maybe a little bit of crude, maybe a little bit equities. That gets in there too. Maybe some ags, maybe some crypto. You never know. Maybe some hogs. You never know what's going to make it on the show every week. So I got to tune in every Thursday, 1:30 p.m. Central for the live stream or get it on the podcast, wherever you find your finer podcast programs. And I'm pleased to be joined once again in the studio, in person. He was traveling a little bit last week, but we got him back in here. Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to the show, sir. How was your trip to the West Coast?
Trip to the West Coast was fantastic. It was short and sweet. Put my son on a cruise ship. He's spending a semester at sea. Traveling abroad for...
Lucky fellow. Maybe we can switch. He can come host the shows, and I'll go do my a nice 3-month cruise on the ocean. There are definitely worse things. In my day, you couldn't do such a thing in college.
But you couldn't.
Not for credit, anyway.
But it is good to be back, so thanks for having me.
Glad to have you on. Since you're in studio, I'll give you the pride of place, sir. You can choose where we go first on this week's epic journey through the world of futures options. Do you want to start in your bailiwick equities, or maybe should we build into that? Should we start with like a crude or a gold or something else? Ags? What's floats your boat this week, sir?
Why don't we crescendo to
Crescendo to... See, I like that. I like how you're thinking. Well done, sir.
crescendo to equities at the peak of the conversation today.
Because we all know equities is the peak, right? It's what brought you to the dance. It's what everyone's coming to town for. All right, so let's start in crude then, because I happen to have it up on my screen right now anyway, so that works. Everyone who's listening to all things crude knows this has been an interesting week. The narrative, of course, last week was like, oh my goodness, where's the bottom in crude? What's going to happen? What's going to happen? We saw crude, of course, everyone knows WTI plunging almost 50%, 44% in Q4. It just completely bottomed out. And then, of course, over the past week and change, we saw people apparently kind of a double whammy, a double boost. We saw people maybe starting to believe in this trade war conciliation talk, because that was, of course, weighing on crude, was global demand was sagging. Maybe the trade war, maybe, in quotation marks, maybe there is not as bad as people were thinking. So that, of course, gave a little bit of a lift to crude. We also saw people actually on Wednesday, OPEC, kind of leading the dance to say, hey, this cut's going to happen. We're going to make it happen. People clearly, they had some questions about it. Maybe now some of those questions are answered. So all that kind of combining to give crude a lift as we're coming into showtime here. 52.5, Mr. Sean, in WTI. That's quite a rally from the mid to low 40s we had not too long ago. In fact, it's up 23%. It hit its 18-month low on Christmas Eve, Sean, of all times. So I guess an inauspicious day to be trading crude, Christmas Eve. But up 23% from that level. Brent also up about 22% since bottoming out around that time. And this week, of course, up another nearly 5 handles, 4.5 handles, so roughly almost 10%, about 9.25%. So another good week here for crude. Again, you can find all this info, cmegroup.com/TWIFO, TWIFO. That's where these reports live. You want to get the premium edition, head on over to BANTIX.com. My buddy Nick, by the way, still traveling here in the early part of the year. We'll get him back on the show hopefully soon so we can break down some of this fun stuff for you a little bit here too. But of course, as with all this upside, maybe some of the concerns getting alleviated a little bit out there in crude. So we saw the vol taking a bit of a break. The vol down, about 7 to 9 handles, depending on where you're looking across the board here. Vol just getting crushed. Which is, an interesting thing. People have been talking about this. I think even the Journal wrote about it recently. They like to talk, when they quote it, they like to talk in terms of oil VIX, which is WTI, and that also is off quite a bit. It was in the 50s the last time we were talking about it. If you know this product, or this index, I should say, you know that it was hovering around the mid to low 20s for the better part of all of last year until Q4 and all the OPEC stuff happened when it shot up into the 50s. Now it's coming off about 10 handles or so since the last time we talked about it, in about 42 range. Again, that's kind of the VIX of WTI, showing you kind of where the at-the-money vol is out there right now, with all the little bit of skew cooking out there. Speaking of skew, let's see what's going on out here in WTI land. Our most active contract this week was actually, looks like the Feb contract, with about 38%, actually. 38% of over almost 40% of the paper. So let's look at the skew there. Obviously, that's a short-term contract, only 6 days, so it's kind of hard to read too much into that skew. It can move quite a bit. So maybe let's go out 1 month just to give it a little bit of extra time. And we'll see there the puts getting a lot more bid here than they were last week. They were about 3% enriched to the at-the-money last week. This week, 6%. So the puts getting a little bit of love despite the rally. That's kind of interesting. Maybe people concerned that this is a short-lived phenomenon. The calls hovering about the same. They were about 4% discount to the at-the-money this week, about 4.5% discount. So they haven't really moved too much. The puts, though, at least 2 months out, is where kind of the lion's share of the action was. And actually, for our number one with the bullet trade this week, it's a bit of a tie as well. We've got the, what do we got here? First off, we have these 50 puts out here in Feb doing 17,000 contracts here in all week. The lion's share coming on Wednesday, 8,200 on Wednesday, 4,000 today, 4,000 on Tuesday, total about 17,000 and change here on the week for the 50 puts here in Feb. And then hot on his heels, number 2, are actually the 40 puts still. By the way, those are kind of unched from an OI perspective. So a lot of back and forth on the 50 strike. Not surprising, given the fact that it's a strike we were vacillating around quite a bit this past week. Number 2, hot on his heels. We're actually got to go out a month. You got to go out to the March 40 puts, doing nearly 16,000 there as well, 15,600. Again, the lion's share on Wednesday, nearly 6,000 on Wednesday, and about 3,000 and change just about every day. Today a little bit lighter, 2,200. Net about opening, about 4,000. So that might show why some of those puts were moving a bit. We saw opening on these 40 puts. That's going to bid up the skew a little bit there. So interesting stuff going on. Maybe some people concerned, maybe not buying what people are selling out here. That OPEC is selling that there may be still be some downside. 40 though, that's pretty low. We didn't hit that even in the nadir back in Christmas Eve. So interesting stuff here. Positioning on the 40 puts here. Let's look out here really quickly. And open interest up a decent amount, about nearly 4% this week, about 3.7%. Interesting stuff out here in crude. As Sean mentioned, the crescendo. Let's build to it then. Let's build to it. Mr. Nick, he loves himself a little bit of the shiny stuff, so I'll do him a favor. We'll talk a little shiny stuff next, Mr. Sean. How's that? So we can crescendo. Keep the crescendo moving here into all things equities. Again, CMEgroup.com/TWIFO is the place to find the reports. Go to the drop down there, choose the metals, then choose gold, and you can follow along with everything we're talking about here. Gold, as you know, as we saw a little bit of a sell-off early in the week, now we've seen rallies coming here again. So gold kind of mixed on the week, net up about 5 handles, about 12.90 right now is where we're hovering coming into showtime. Gold vol, as it always, I think we have a listener question about that later. Gold vol, always kind of a mixed bag, and it's kind of a mixed bag again this week. Pretty much coming off across the board, except for that front contract, which pretty much has a day to go, so that's pretty much all gamma. Anyway, in terms of what was lighting it up out here, let's see. What do we have? We have these Feb 1,300. So again, makes sense. We're flirting with that even level 1,300 strike, and that's pretty much where the action was this week. 43% of the volume going up in that Feb contract with the 1,300s again. Leading the dance out here, let's see, a total of about 8,300 going up. The lion's share again on Wednesday, 3,000, 2,000 today, and about 1,700 on Monday. Let's see here really quickly as well. We like to look farther afield, 1.5% here. Up OI on the week here for gold. So not a very active week overall for gold. We like to scan a little bit farther afield. Let's see, 1,500 calls also getting some love here out here in June, doing about 4,000 almost contracts, 3,880 here this week. The lion's share yesterday, almost all of that, about 3,800 going up yesterday on those 1,500s as well, which is kind of interesting. I do think we have... Let's see. I will cheat and I will bump up one listener question now because we had a listener write in earlier today. Olive Trader 2. Bless you, sir. Olive Trader 2. He listens to the show quite a bit. He wants to know, not sure why we were not seeing the same kind of interest as last year in gold option spreads. Although someone bought more than 500 1x2, 1,300, 1,400 March call spreads here this morning. 1x2. Let's see here. That's where we were just talking. We're talking about the 13 halves. He said 1,300, 1,400. Let's see if we see that print. I see 13. Oh, he says 500. So that's pretty. That probably is low on our radar here. But yeah, it looks like that could have printed. I don't see the 1,400s. I see 1,300s, 1,400s way below. Maybe they did. But I don't see 1,000 even going up on that strike. So interesting stuff. But yeah, it's a good question. Why isn't there? We kind of talked about this. I mean, in fact, Sean, I don't know if you were tuning into our show last year before you were on it, but one of our crazy trades of the year were these crazy size 1x2 verticals in gold. They would kind of go up a couple times a year pretty much, and they were huge size, and then they would sit there all year. It's like someone was expecting crazy upside movements in gold, like crazy gold bug type movements out there, and we never saw them materialize. And our friend Olive Trader is asking why we're not seeing it. I mean, maybe it could be as simple as that guy kind of shot his shot, right? He put his big crazy trade on. He put all of his cap. Obviously, he had a very bullish gold, fund, or he was very concerned about extreme. It was many handles. I think couple thousand handles away from the at the money. They were extreme. I think gold was at around 1,200 at the time, and they were 2,500, 3,000 vertical, something like that. Yeah. Extreme. Gold had to more than double for these things to start coming into fruition. So they were extreme. And yet our friend here, Olive Trader, asking why we're not seeing. I guess if I had to go out on a limb, again, I haven't parsed the paper for crazy upside in a little bit, but if I had to go out on a limb, you can't put too many of those on, right? Before they start to leave a mark on the old portfolio. Would that be? I know you're not a gold guy, Sean. Would that be your guess as well? Probably maybe this guy just he shot his shot, and so far at least it hasn't really worked out in his favor. We haven't seen the calamitous gold move that market move and the calamitous move in gold as a result that he would need for that trade to really pay off.
Yeah, if his strategy's not working, he obviously moved on.
Get the heck out of Dodge, right? And so he didn't. I don't think he closed. I don't think he got the heck out of Dodge. But you're right though, Olive Trader. We last year had a bit of a theme of crazy upside ratios and verticals in gold, and that's not really holding. In fact, I'm looking right now. I'm parsing. Gold's one of the ones I like to do those scans where to the extreme wings to see what's going on, and we're not seeing a lot of that. We're seeing the crazier again 1500 strike lighting it up today here out there in what is that? That's June. Doing about 4,000 of those, and that's probably the crazier one at 1450. So maybe there's, and it looks like all that going up yesterday actually. So we saw 1400, 14.5, 1500s going up. Looks like maybe 1 by 2, 1400, 1300 times, 14 halves, 1200 times, and then the 1500 maybe as a kicker, 3800 times. So not the ratios don't really work out. Actually, be more like 1 by 3, but maybe a vertical with a 3x call kicker. So maybe that might be fall into your wheelhouse there. Of this, maybe this is the one you were referring to. Maybe that one. Maybe you had the month off because it looks like this one is out here in June. So that could be. This is probably again. This is not the same size we saw, and the strikes are nowhere near as optimistic as we saw last year. But maybe this will have to do for now. We're going to keep an eye out there. Maybe I'll create some sort of custom scan to pull those up when they come in, or maybe I'll have Nick and his team build that for us. Because you're right, it was popular paper for a while out there in crude land, and now, for whatever reason, not crude, I'm sorry, gold land. For whatever reason now, it's not getting the love. Speaking of getting the love, I can't wait anymore, Sean. Let's do it. We're crescendo. We'll have some more listener questions. We'll get to more equities later, but let's do it now. Let's crescendo mid show. We do need crescendo music. You're right. I need to make some product segment transitions for this show. It'd be kind of fun. Here comes equities. Here comes gold. That'd be kind of fun, wouldn't it?
You want to start with a question from?
Do you want to do questions in the? We could do it. You don't get to be in studio that much. So do you want to start with maybe if you have some stuff you want to share first, we'll do that, and then we'll get into. I'll do a little bit of a rundown here, and then we can get some. How about we'll hit some questions, and we'll just go equity crazy. How about that?
Sounds good.
Folks like their equities. I don't know if you know this.
So, things are going extremely well with the Russell suite of products on both of our partner exchanges, CBOE and CME Group. Just to highlight some numbers with you, it's averaging north of 150,000 contracts a day. There's a really good tight bid ask in the futures contracts. Options are trading on CBOE Global and also CME Group. Open interest is north of 500,000 contracts. So there's not only just trading, but there's what I like to call as investing going on when there's open interest. It's used as a hedge, and it's also used for equitization. So there's real confidence in the products. There's institutional trading in large numbers in the various facilities to do that. Just a very exciting growth. I expect the growth to continue through 2019.
You're obviously out here when you're not in the studio. I tease you, but you're traveling hither and yon, spreading the gospel of Russell abroad here, Sean. And I'm curious, as you've been out there, you hit Asia recently on the West. You kind of gone all over. You went to the East Coast recently as well. What is are you starting to see, maybe just in general, given the tumult we saw last year, are people starting to get more interested in the small cap narrative, the small cap story? Obviously all the time people are always S&P. It's kind of the big dog, the big benchmark. Are people starting to look at allocating more towards small caps? Does the volatility story resonate with them? Does that scare them? What are you hearing kind of anecdotally as you're out there talking Russell hither and yon?
Well, think about it this way. There's probably $9 trillion benchmarked to the Russell 1 and the Russell 2000. So the suite of Russell indices has a tremendous amount of money of assets under management. So from an investor side, it's just a tremendous dollar amount of money. And with that comes trading, with that comes hedging, which also comes equitization. So to be able to utilize the derivative space for portfolio enhancement as well when it comes to using options, right? So it's just a great story. And again, small caps is become a global story. Even though you've got mostly domestic stocks, it is definitely a strong play because the index has been moving, and actually it's been it did take a turn to the downside, but now you see the Russell index rallying at this point. So it's tradable, but the index itself is investable, and trading futures and options only enhances that investment.
Yeah, that did surprise me because, the narrative obviously going into some of the trade war talk was it wouldn't really impact, small caps that much. We've seen maybe since then that, there are still some macro currents that will bleed into the small caps as well, which speaks to what we said earlier about the overall volatility story of small caps. And I think if people are looking for things that were volatile, small caps delivered on that in spades. We're at about what we had 1442 right now coming into the middle of the show here out in Russell land.
And just to get back to globalization, 10% of volumes come out of Europe trading the Russell futures contract. So Latin America and Asia also. And in Asia, the index is closed, right? The cash market's closed, but there's still activity in the futures contract, which tells you that the world's watching this product.
That's my question.
And trading the product.
That's my question for you, because the narrative is always that Russell's kind of domestic, right? But we are seeing a lot of narratives of these products are starting to resonate internationally. It sounds like that's the case for you guys as well. International hours, you're seeing strong interest in Russell as well?
Absolutely. And the fact that CME Group gives that capability to their customer base, you see that activity continuing throughout the night. Our night.
Our night, yes. Speaking of activity, I'm looking here at the numbers again. You guys can follow along, cmegroup.com/TWIFO. Another strong week here for the Russell 2000 options over there on CME, up about 6.5% in terms of net OI. And we all know this has kind of been an interesting week again. They continue to be interesting weeks from the equity space. We could do the whole show. We do many shows on the equities. We could do this one all on equities these days as well. There's so much going on out there. Right now, we like to talk about that spread, small cap to S&P versus from a volatility perspective. Right now, we've seen some movement, but overall, it's still about where it was last week. The VIX is hovering around at 20. VIX seems glued at that 20 level lately, which is eerie in and of itself. Stay tuned to our Vol View show tomorrow. We'll talk about that a lot more, but hovering around that 20 level, which is kind of glue. The futures are there too, which is kind of interesting and weird. RBX a little bit shy of 24, about 23 3/4. That's of course the small cap VIX. So about 4 points lower than where it was last show. VIX also 4 points lower. So that spread hasn't really moved. It's about 3 3/4 handles, which is a little bit wider than last week, but it's on the wide side. Usually it can hover around 1.5 to 3 points. So it's wider than that right now, which is interesting. We have a question I think a little bit later about how we can break that down. But let's look here really quickly again, some of the flow we're looking at out here. Looks like we had 1445 coming into showtime here, and looks like the 1490. Actually, no, I take that back. 1445s out here in June of 2019. So longer term paper out here, lighting it up to the tune of Russell. That's the big. Or is that in March? I'm sorry, that's March. It's hard for me to see on this. It's so far down, so many strikes there. 1445s are the action-packed area, followed hot on its heels by actually 14.9ers a little bit nearer term in the weeklies, the week threes out here in Jan. So upside seems to be the narrative of choice here, Sean. So I don't see a lot of real downside put hedging out here of size. So it seems like that's the narrative of choice. Let's just see really quickly. Let's pull up our old friend, the E-mini S&P, see if we see a similar narrative out there in terms of overall just where people are leaning. S&P coming into showtime, 25.90 on the week. It's net up 60 handles on the week, so it's been a good week for the bulls. We've seen a little bit of a turnaround out here in the broad market. Is it sustainable? I guess we'll find out. Right now, the lead in the dance in the E-mini S&P 500, the week 2 2,600 calls, which are pretty much slightly 10 handles out of the money calls with about 30,000 of those bad boys hitting the tape. So that's kind of similar narrative. Upside calls in the Russell 2000, upside calls in E-mini. So maybe people are buying what the market's selling, Sean. Maybe they've been waiting for a while, maybe on the sidelines after this sell-off, or maybe they got shocked out a little bit. Now they're coming in, and they're not, well, except for Russell, they're going a little bit longer term there. But here and then the other Russell contracts, they're playing in the weeklies and doing it for size. So I guess near-term upside is the narrative, which I guess if you look at the numbers out here is not entirely surprising. Let's cheat. We'll do one question now, and we'll save some of the rest for later. How's that sound, Sean? We got a bunch of questions. You go away for a week, and people miss you, Sean. They ask questions for you. Let's do let's see. Let's do the first. Go in order. Let's go to this first one here. Corey T. He wants to know. Pretty simple one. I'm glad you're here because I can't answer this one. This is for you. He wants to know: are there any new Russell options coming this year. So maybe he wants you to give a tease for your around the block or your upcoming pick here for what's coming down the pike. So
is he asking Russell or RVX options?
Any of the above? He didn't really specify. So what do you have up your sleeve, sir, for us?
Just get in there and trade those RUD options on CBOE, and I think you get the exposures that you need, or trade the Russell 2000 options on CME Group as well. But there's Russell 1000 value and Russell 1000 growth. There's Russell 2000 options. There's quite a menu of Russell options out there.
So no plans to grow the menu. It's more like consolidate, maybe building up the menu a little bit internally with flow. Is that the goal here for coming in 2019, or is the goal to add some more products as well?
From a FTSE Russell perspective, we're definitely going to expand product, but nothing to announce yet. And again, that will come from our partner exchanges. But we definitely see upside and growth in the existing product suite.
There you go. So Corey T, no news to break for you yet here, Corey.
I hope that's good enough news for Corey.
He wants us to break news here. He wants you to come out here and break all the news for the coming year, sir. Our listeners they're demanding. They're a demanding bunch. They want news, they want it breaking, and they want
Tell
it
me
right
what you
now,
want.
Sean. Exactly.
Tell me what products you want.
Yeah, hit him up. You said your email before here on the show.
Client demand drives product
Hit him up.
innovation, right?
Tell him what you want, or write into us here on the show. What product would you like in the Russell 2000 that would be interesting? Maybe something crazy, maybe some sort of crazy SKU product, something fun. Who knows? Hit us up. Let us know. That stuff is always fascinating to us. Let's see. We'll hit a few more product categories here, Sean, so the other folks out here don't get mad at us. Soybeans. Let's go to the ags a little bit, because this has been, of course, ground zero for all things trade war here. And we've had some interesting shows last year. I read off some of our top 10 shows of last year, actually, on our final show at the end of last year, actually last week's show. And we saw that the beans were pretty popular with you guys. So let's get into those a little bit again. You can't talk trade war without talking these beans. That's kind of where the action is right now. Hovering around that 900 level, coming into showtime, off about 10 handles on the week, right around 910. There's still a little bit of concerns. Like I said, there was excitement. Maybe the tensions were easing between us and China. Maybe now not so much. There was some excitement this morning. Looks like China approved a new product for a genetically modified seed. So maybe that led some people in the ag community to be excited that maybe they were paving the way for these trade talks to ease. And the ban, of course, you saw historically recently, 0 imports of soybeans to China, which was a first pretty much. So people are hoping that will turn around soon. Maybe that the fact that they are improving this seed from Dow DuPont, which is supposed to be pesticide resistant and everything else, maybe that is a sign that they are going to open the doors. We shall see. Obviously, it's some sort of conciliatory step. Right now, like I said, this beans are off about 1.5% for the week. Kind of a vacillating week here. Vol also a bit of a mixed bag. Again, you can find this cmegroup.com/TWIFO. Click on the ags and click on the soybeans. You'll follow along with this, listeners. Vol, again, also a mixed bag. Kind of up in some terms, down in others, but not really a ton to write home about vol-wise this week. Again, everyone's kind of waiting for that shoe to drop, right, Sean? That they want to know if the trade war is on or is it not. And that's pretty much the big narrative out here in soybeans. Open interest up about 3%, so a decent month, but not rock'em sock'em robots up here. March looks like it's leading the dance with about 40, almost 41% of the paper out here. So let's take a look at the skew first really quick. Looks like the skew is also kind of unched from last week. The calls are bid, but ever so slightly. 3.5% bid to the at-the-money puts about not even 1% cheap the at-the-money. So you got a little bit of a call skew there, but not a ton. Again, indicating people have some near-term interest in the upside. They think maybe once this trade war is done, they're prepping for a pop. But other than that, not a lot of movement in the skew. It's kind of a bit of a dead week out here. Everyone's waiting for some more news on the trade war. Meanwhile, we're seeing the big action, not surprisingly. We're hovering around that 900 level. It's a big, open, systematic, symbolic level, and we saw that was leading the paper out here. 900 puts in March, doing just the lion's share of the volume, up 11,000 and change, 11,500 roughly. The lion's share coming yesterday, 4,200. Today, about 2,500. Tuesday, about 3,000. So pretty evenly spread throughout the week. But that is where the lion's share of the action was. And we go off to the 980 calls. Number 2, about 7,000 of those. Again, about 4,000 on Wednesday. So Wednesday was clearly the day when the beans were lighting it up. Both of those ever so slightly opening, but not a ton. So again, kind of an interesting week, but kind of a wait-and-see week out here in the beans. Everyone's kind of waiting for more definitive news. The 1,000 strike was trading a little bit this week as well. We've got out here in the July 2019s, the par is doing about 4,000 contracts this week. But that's kind of the extent of the narrative here. Near term puts, longer term a little bit calls. People waiting and seeing out here in Ags land. And let's do really quickly, because we did, hopefully you guys checked out. In fact, if you're listening live, you got a chance to hear it in the live stream in between shows. There our brand new program here on the network, the Crypto Rundown. Do that with our friends over there at Acuna Capital, where we run down, surprise, surprise, all things crypto. Looks like crypto taking a bit of a break today, I think, to use that euphemistically. It seemed like we had maybe solidified some support for the Bitcoin futures around the 4,000 level. Today, not so much, seeing that coming off about 400 handles. So a big sell-off here in crypto right now, about 3,600, actually 3,595 in that front month future, the Jan future over there on CME. Doing decent paper as well, about 5,000 contracts on the tape so far today. So a busy day, an active day. Unfortunately for the crypto bulls out there, another downside day out here, nearly 400 handles. So we talked recently about how crypto and Bitcoin in particular, not as volatile as you might think. The vol hovering usually in that 60% range. Of late, though, it is spiking up to 100% in north, and today's move obviously going to exacerbate that volatility story as well. So, Sean, we talked equities, we talked gold, we talked crypto, we talked crude, we talked ags. Are there any products you want to hit on before we get into the listeners? You want to get some more listeners on the show?
Let's just keep going.
Let's get going with the listeners? All right, I like it. Let's do it then. Listeners, it is your time to shine. It is time to get into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's get into your feedback. You got a bunch of it. Keep those questions coming at Options, or hit us up via our website or the social media, or email questions@theoptionsinsider.com, or hit up Sean independently. Hit him up with your personal questions, and he'll be happy to entertain all those, I'm sure. We've already cheated. Got a couple here on the show. Olive Trader, Corey T. Let's keep rolling here. Got a bunch here. This one, too bad Nick's not here. This one, he would love this, because this is kind of his go-to position right now. AB41S. That one rolls off the tongue. AB41S. He wants to know long put and long stock or futures. That seems to be the way to be in this market. Question mark. Yeah, I mean, right now, this week in the equities at least, it kind of depends which market you're talking about. I'm assuming, because he says the market, I'm assuming he means equities. And certainly this week, that has worked out, has it not, Sean?
It has, but yeah, long put, long futures is a synthetic call, right? So
that would be,
definitely
yes,
an upside trade.
So maybe he wants to look into just getting some call action, saves himself some capital. That's always a way to go as well, right? A little capital efficiency. If you like upside, maybe a call vertical may be a way to go. Certainly this week, today notwithstanding, this week that narrative has worked. But yeah, if you were interested in these levels, you saw these retracements as opportunities to maybe get some exposure in there, that certainly could be the good way to go. Those puts were a little bit bid, so you may have to pay up a little bit for those. So maybe you use a put spread there to offset some of that premium there. But in general, certainly in near term this week, that trade has worked out pretty well. So yes, I guess short answer for AB41S, yes, that has worked out right now. I don't know if that's the way to be all the time in the market right now, but at least for this week, it's doing all right. Gustand, Sean, we get this question like pretty much from the gold bugs all the time. Gustand X asks it this week. He wants to know, is this the year that gold vol will catch fire? People want gold vol to catch fire. We've talked about it a lot here on the show. When is that moment? I don't see any indications that this is that moment in gold vol. We just talked about it earlier. It's kind of dead money right now in terms of the volatility out here in gold, and it has been for some time. Now, Nick has made the point many times, it does pay the rent. It moves around enough that you could scalp the gamma, and you can end up doing all right with the trade if you're savvy and you have accounts that allow you really to scalp with enough capital to do it. If you're just kind of buying and holding the premium, not so much. It hasn't really worked out as well. So you have to be a little more savvy to make that pay off for you. But yeah, I'm looking at this. Let's see, right here. I'm back up in gold at cmegroup.com/TWIFO listeners. You can pull up the gold for yourself. I'm looking at the most active month out here right now, which is, again, the Feb, and looking at the skew to see if there's any indications of big changes coming, maybe a big move that they're expecting that would maybe lead to some vol. And we're not. The calls were bid last week. They're less bid this week. And we're seeing the puts were cheap. Puts getting a little bit more bid this week, so maybe some downside coming. If we do see some downside, that might lead to a little bit more vol juice out there. There have to be some protracted downside, though, to really get the vol to get juiced and stay juiced, which that's been the problem, right? We've seen it pop, but it always dies almost immediately thereafter. So we need something to have it sustain, maybe some sustained downside. Gold could do it. That might equate to some sustained upside in the broad equity market. We shall see, but I don't see anything pricing in right now that's leaning me to say, no, this is the moment. We did have that moment a couple of years ago on the show. The first time Eric Norland came on from the CME with one of his reports, Sean, it was kind of fascinating, actually. It was he came on the first time, and it was probably about 2 or so years ago, close to it, and he had a report entitled Gold Vol Storm on the Horizon, ? And his whole report was, is gold vol too cheap right now? Is this the time when it's finally going to move? And guess what happened within like 2 days? It exploded. And gold vol took off. And to this day, I've told him, that was his introduction. And I was like, you're great. You can come on whenever you want. So I've told him many times that was the best. The best. He's been on a few times since then. That was the best timed, to this date, the best timed economic report we've had on the network. So I'll have to look to Eric, see if he thinks it's just structurally we're in a good place right now for gold vol. But yeah, again, short answer to your question here. I don't see any setups, any movements, any skew that's going to lead me to think that this is it. This is the year that gold vol moves up and stays up. The latter part is the key part of that equation. We haven't seen it staying up. All right, Sean, put your listening ears on here. We got these handles are crazy this week. Question from 55T7T. That another one just rolls off the tongue here. I like the spread analysis between the VIX and RVX. Well, thank you. He goes on to say, no options on RVX, though. So what's the best way to trade the vol spread between Russell and S&P 500 right now? Well, if you want to trade that spread, you kind of got a few ways. The primary way, if you want to do it the way we're talking about here in these futures options, is you kind of got to do the old straight-up straddles in the two, which I know people don't want to hear that. It's kind of...
You got to trade the options in the rut.
It's kind of daunting to them. I got to do a straddle. You don't have to do the straddle. You can obviously do spreads between the two, but you have to have some premium positions in both. It's kind of the only way to do it. You obviously can trade options on the VIX. You can't do options on the RVX. So if you want to get that vol exposure, that's kind of the way you pretty much have to do it right now, at least for the contracts we're talking about here. Do you see a lot of interest? Obviously, the differential between the two is pretty wide. When we've seen that in the past, we used to see, especially when RVX was listed, that's when we'd see pops in trading in that contract, right? When the spread, when they get very disassociated, get very wide. So when you're out there doing your roadshows, talking to people, now that we're back in kind of that wide portion of the vol spread curve, are people starting to get intrigued by spreading between the two, whether it's with the RUT options and the big S&P options, something else? Is that starting to be more of a conversation again?
It's definitely a conversation. I hear conversations regarding the volatility between the two index, two RVX and VIX, and so the only way to actually trade that is with the option. So I surmise that, meaning they're trading the options against each other.
That's good to hear. We like to see that that spread volume obviously accretes volume to both, right? So we like to see people slinging in both. So yeah, that's pretty much the best way to do it right now. Is you got to get your hands dirty, you got to get your feet wet out there in those futures options contracts and get some of the premium on. If you want to go straddles and hedge those with underlying, that's a good way to do it. But again, that's a little bit more savvy, a little bit more sophisticated, a little bit more expensive from a contract and from an underlying perspective. So you can do some various premium spreads between the two as well. But you got to get in the options. Pretty much that's the only way to do it. You can't really do a direct RVX to VIX right now. Unfortunately, maybe someday again soon. We talked about that on the show before, but right now, not so much. Here's Sean, you're getting a bunch here. So good thing you're in studio today. Season 35 wants to know, you guys talk Russell options on the show, but not IWM. Could you break those down along with the Russell E-mini options? Aren't they all Russell options at the end of the day? So this guy wants us to do the full suite of all things with Russell on them. Sean, why don't you, A, I don't know if our show is long enough, but B, why don't you maybe break down what these different products are and kind of how they shake out?
Yep, absolutely. RUT options on the CBOE are a larger notional contract. So it's like a $140,000 notional value contract, where IWM is the options on the ETF IWM, which is the Russell iShares. E-mini Russell options are CME's Russell options on the futures contract, which expire into futures. So those are the three products. But again, back to the IWM, it's 1/10 the size of a RUT option. So it's a much smaller contract. So if you want more bang for your buck, you trade the RUT.
People might think because you're the Russell derivatives guy that you kind of do all of them, but the IWM, that doesn't fall under your umbrella, right?
No, it does not.
That's another reason why we don't talk about it. That's not your product to talk about, so it wouldn't make sense. So yeah, even though they're all called Russell, and I think it's an easy assumption to make, yeah, we talk about these ones because those are actually the products we have at hand here to discuss, and that's the ones that Sean actually works with. So yeah, but it's all interesting stuff. If you want Russell exposure, there are a legion of choices, as you just broke down for you, depending on your notional size, how much exposure you want, venue you want to trade, and all these kind of things come into that consideration. But you do have the nice thing, you have options, pun intended, Sean, when it comes to ways to trade the Russell out there.
Plenty of options.
Plenty of options, yes, indeed. So let's see if we got I think we're going to save some of these we have some very specific product questions that I think it makes more sense to have people on. Like we have Sean on to talk equities. We got some people on to talk some of these in-depth ag term structure questions, as well as some of the WTI Brent spreads and a few other people out there slinging these things, so they can talk, what they're seeing in the paper flow as well, which is always, I think, informative to us here at the end of the day. All right, everybody. Unfortunately, that music means we're coming to an end here on the old TWIFO. But Sean, you're here in person, so you get pride of place. You get to go first, sir. We kind of did a tease earlier, talking about the guy who wanted to know what's coming up so he kind of maybe stole your tease, but who wanted I forgot the guy's name. Who wanted all the breaking news? Corey T. Corey T. wanted all the breaking news.
Corey wanted all the new products coming.
Let's leave him with something, Sean. Let's leave him with the hint. Let's leave him with the tease. What can we look forward to from Russell and you and your crew in 2019? So give us a nugget. Give us something.
Corey, pick up the phone, call Rick Rosenthal.
It's not for me, it's for Corey. It's for poor Corey.
I said, Corey, please pick up the phone, call Rick Rosenthal at the CBOE and talk to him about bringing RVX versus VIX spread. I think there's an opportunity there, and I think the more client demand we get for being able to spread those two contracts would be a great way forward. In terms of new products, they're definitely coming. Unfortunately, I can't announce them.
He's not going to tell you, Corey. He won't even tell me off the
But there's new products coming.
He won't even tell me. He's that tight-lipped. He's running a tight ship over there. So unfortunately, Corey, I don't think you're going to squeeze it out of him here today. Maybe I'll ply him with some beverages after the show, and I'll see what I can do.
But the fact that you're asking means you're a fan of the RUT. You're a fan of the Russell products, and keep trading them, please.
I'd love to see the RVX VIX spread. I mean, how great would that be? Just have something. People clearly want it. They're asking for it specifically, even if they don't know they are.
Absolutely.
So let's get rolling on. Meanwhile, people want to learn more about FTSE Russell, what you guys are doing. Where should they go? What should they do, sir?
smith@FTSERussell.com. That's my email address. Any questions, anything I can do for you, please call me, email me.
There you go. Man gave you his personal email address, or his personal business address, smith@FTSERussell.com. Hit the man up, Corey. All the rest who want the secret nuggets of info, maybe he'll give it to you on email. Maybe he won't give it on here. Let's see. Hit him up. You can ask him and find out for yourself. smith@FTSERussell.com. And of course, check out all the reports and everything else going on over there at cmegroup.com/TWIFO for the reports. And if you want the real thing, though, that's kind of like a baby taste. If you want the real deal, Quick Strike, you got to head over to BANTIX.com, BANTIX.com, or QuickStrike.net. Those are two places you can sign up for the real deal premium Quick Strike. I'm talking to Nick. We're going to have some cool offers, I think, coming out for listeners of this show, too, so you can kind of really dip your toes into the Quick Strike waters at prices that are affordable for you guys, which is kind of the goal for this stuff. So, again, if you're listening to this show, you're interested in these products, and you're not using Quick Strike in some way, shape, or form, I honestly don't know what you're using, because it's kind of the only game in town for a lot of this data. So check it out over there at cmegroup.com/TWIFO, and when you're ready to upgrade to the big boy version, head on over to quickstrike.net, and you can do that right there. Tell Nick we sent you, so he knows where you're coming from. He'll be super excited. And on behalf of Nick and Sean and our buddies over there at CME, and indeed myself, I want to thank all of you for downloading, streaming, subscribing, and for all the other fun stuff you do, asking questions, listening live, all that good stuff. Keep it coming, and we'll see you next time for more of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at BANTIX.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QuickStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.